Welcome everybody to another 144 and 360. We're going to follow up a little bit from the soybean oil we did in our last video and the 78.6% retracement. For our premium members, we're also going to cover the notes, the dollar, the euro, and the yen. Even though these aren't the grains, it is still important to understand these things, how they play out in all markets. And as we keep saying in every post we have, that we believe the Fibonacci retracements are the underlying structure of all markets, and we hope to prove it to you a little bit more today in this video update. So we had back here where this whole move started with a 78% retracement. Always, these things are always so key to watch from here to here, fail to make the new low. And when it comes at this 78.6, it can turn the market for a little bit, or it could turn it for a long time. In this case, we went up to 78.6 of the high, and this low here got to close above it, one back below it, got to close above it, one back below, above, below. As those who are following us know, it needs two consecutively higher closes above something, or two consecutive lower than underneath something if it's going down, to truly violate that level. Now, 78.6 has two different things. It can go 78.6 of the full move, or just back the other way, or just 78.6 of just the smaller move. In this case, we'll go back. I'll get to this one in a second, but here's the other one where we held 23%. And this is what's good, which is also helpful, is that when we hold a retracement and then go up and fail to make that new high, we would be looking for new highs from this retracement. And as we always say, that not fulfilling the target also tells you something to look for on the other side. And in this case, we hit 78.6 up here, and these are the ones that turn this market when there's less time in between the time that it's coming back to test it. As you see here, it took months and months to get back to 78.6 here. Here it was within a month's time, and the bigger moves happen. So the 78.6 up here should be sending us long-term, when we see these things, to 78.6 the other way, which, as we've said to our subscribers, that these retracements tend to go through all of tend to go through, and sharp moves and through all the retracements, which you're seeing here, 38%, 61. We could close back up above here, but this is where we are now. 78 to 78 would take this one down here. Now, just showing you that this happens in all the markets, and just recently, we'll just go into the notes now, and we're going to do the Ds because it, even though they're into the March now, because there's data back here that we can use and it's not dots. So we take this high here down to this low, two extreme moves, 23% back. We know the market's still negative and very negative. Goes on to make that new low. Now we take this retracement again, move it down here up to here, 23%. We should be looking for a new low. What happens here? 78.6. Okay, this is what we're talking about, finding these areas right here that you see right in here. You can see it's nice and clean and gets the hell out of here. And you can see now that we've already hit 38% of this whole move down. And that's going to be, we can also then watch 38 below it. But once again, here you are in the notes in a 78% retracement that turns this market back up. Now, when we go to the US dollar, we have, again, going back further, 23% holds on to new highs, doesn't stop at 78.6% in here, holds 23%, and then finally, here we go, 78.6% just recently in October to end the move. Sometimes it's just back to 78.6 of this move here. In this case, it went through 23, but right back above it. Next rally goes 61.8, but here you are at 38.2% of this whole move that they had going up for quite a while. So now, having this being 38 at the contract high and low here, this should send us to, it can send us to new highs, or at least we'll be watching 38% back up. Now, being that this is, and what we're trying to show you is that this is in all markets and the exact same rules and guidelines, is if this is the US dollar, then what's it weighed against but the euro, yen, and other currencies? So shouldn't the yen or the euro be up against something? So in this case, we're going to go to the weekly nearest, and we're just going to come back here just so we can get further back and show you the highs at which we're coming from. So a high back here in 2014 and this high, the most direct high and the extreme high up here, both, where are we at? We're at 23% of this and 38. So in reverse, the dollar's found support at 38%, and then you can just look at this on the daily. It looks like a little bit more where they're starting to back away from the market from this level of 23 and 38. So again, it just comes down to that we're just trying to show you how these levels work and how they should work in unison, actually, with what they're going against. Now the yen, same thing here. If we go back far enough, this one, you can see here, and this is why, one reason why we don't put all of these retracements on here, because you can't see half the stuff going on, and that's why we just mark these things for you on our charts on a weekly basis. So here, going back, what was it, 2011 to a low in 15, where does it go? But in 2016 it hits 38%. That 38% took it down to 78.6%. Okay, now this is where sometimes these things take a long time to work themselves out, but you have to understand, are we under the 38%? Are we above it? What's the general direction of the market? So in this case, the 78% down here took it back. I'm sorry, let's go this back to here. Up to this high took it 78.6. This thing's inverted. So we go here, 78.6. So the 78.6 took you 78.6. It took, what, 3 years to do this? But still, that's what, the guidelines say. I can't make it happen overnight, but sometimes these moves are a lot quicker, and then other times they're not. And so if we pull this back some and we go here, so where are we now? But when we take this retracement back here to the 2016, the yen is up against 23%, a negative sign, just where we have the as you can see, we're backing away from that retracement right there, 23%. So this is when the dollar's finding support, the yen. I mean, it would only make sense that if what we're saying is true in this underlying structure of all the markets, then if one thing's hitting a key retracement, then it should be hitting a key retracement on the other market that's going up against it. And here we're just trying to show you this all in how it happens and how quickly and how recently these things have been happening here, as we just showed you on the dailies. And that just trying to get you to understand that these things are in every market, same rules. So like I said, to our premium members, please review all these things, go over it. We want you to know why we think what we think and what the potential is from all these levels. If you like this kind of information, please hit the like button. Even better, subscribe to our YouTube channel. And the best thing of all, if you trade the grains, please become a premium member and get all of these levels well ahead of time and what to look for. So thank you for watching.